FFIE, confirming a few things of great interest to us. Let's go ahead and find out exactly what I mean by that. What is up, you guys? Thank you so much for stopping by once again on this wonderful Saturday night. This is ARCa coming at you with an FFIE, technicals, raw price action, and statistical thread of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community in Discord called ARCab. With that said, let's go ahead and dive right into the charts. Okay, so we are looking at FFIE on the 8-hour chart, and this is the broadening descending wedge that we have caught and had some speculation based on the tests of the resistance, particular to the golden rule of three. Okay, so in this case, the capitulation event that we actually faced confirmed that we are actually on test number 3, and this was a false test. Okay, this candle here that we're looking at on September 16th, 2022. So if we actually, I think I did mention this in one of my videos to where we were actually not quite touching the resistance, and this could actually pose a threat. So as you can see, there is a little tiny gap right there. And in fact, if we make a final adjustment to our trend line here, you can actually see that the beginning of the broadening descending wedge actually surpasses the trend line from September 16th, and we are not touching it. So that could be part of the trickery that we were looking at days ago. My apologies for not being able to keep up with the analysis, as there are so many requests coming in, and I would like to give a fair shot to everybody who would like their ticker of choice to be analyzed. Okay, but with that said, I am here now, and let's go ahead and take a look at what we do have. Okay, so so from the prior analysis, which was actually ended on this candle, you know, from the video that I released, it was actually on December 14th. We did speculate the potential of actually coming back down to test our newly converted resistance into support before a continuation onto the upside. For an 8-hour period, that did happen, and it happened very accurately according to our forecast. But the capitulation event actually confirmed, first of all, what we were considering as a liquidity trap or a bull trap. So it actually dipped a little further than what we thought. Our lowest target was around 41 cents. It did reach about 35 cents. So in this case, test number 3 is the reason why the capitulation event is a little larger than normal. And to be perfectly frank with you, there are still some signals that could potentially be suggesting a continuation to the downside, particular to this gap right over here. I'm going to go ahead and just give you the dates on that. So the candle wick high from December 9th, and that was a Friday, December 9th, and the wick low from Monday, December 12th, that creates a gap, and the gap, let's see, the gap range is between $29.94, so that would be 30 cents. And here's the 32.73. Okay, so about 30 to 33 cents is the gap range that we do have below us. And since we are getting dangerously close to it, you know, aside from that, the price action doesn't really take a rocket scientist to know that, or to see that this is, you know, pretty bearish. The potential of us coming to test either the top side of that gap, which could be at 33 cents, or the likelihood of actually, it would be more probable for us to test the top side, but just know that it is a range, and oftentimes we do fill these types of gaps when we're close to them. So if that were the case, then a bounce can be expected from 30 cents. Okay, so but if we do use it just as a support and, you know, not close the gap, then we could potentially test the 33 cent range top, or 32.83, before continuing on to the upside, thus attempting a true breakout on test number 4 from the broadening descending wedge. Okay, so let's go ahead and move on to the next chart and see what we have. So this is the statistical side of the analysis, and the first upside thrust we actually did get, and we got it pretty much close to the penny. It was a 28% or just about a 29% upside thrust based on a statistical data backtest that we performed on this. Okay, so particular to that test, new viewers, new listeners, what you're looking at here is volatility represented by this indicator BBWP. Volatility is direction neutral. We pair it with stochastic momentum indicator, which is proprietary to TradingView software, which, by the way, the affiliate link is located in the description below. It would greatly help me if you did start an account with TradingView, okay? So in this case, I have backtested the momentum indicator in several tickers, and I have gotten about a 75 to 91% hit rate in guessing the asset's direction, price in price action, of course. So it's not perfect, but it's actually very good to consider and factor into our probabilities. Okay, so from the back test, we actually, the reason why I'm speaking about this is because we're in the process of resetting those conditions that we already had once set for that upside move of about 29% to the upside to be realized. So we're about to reset those conditions once again. And that usually, when you have back-to-back iterations, well, I mean, it's a 4-hour chart that we're looking at, but still, when we have back-to-back iterations of critical volatility, an upside move in a potentially slightly stronger upside move could be in play. Okay, so the backtest actually consists of any time that we have expanded into critical volatility, which can be considered to be above the 90% or within the 90 percentile, and started a contraction phase to the downside while momentum has started its ascent. We have actually taken note of the iterations duration, the iterations upside thrust, and the amount of times that volatility versus momentum profile have guessed the upside correctly versus incorrectly. And I am talking about on the 4-hour chart, particular to the entire trading history of the asset. Okay, so upon performing that back test, we came up with these iterations here. So they're gonna be slightly different now, but they're still relevant at the current values that we're looking at. And the reason why I'm saying slightly different is because the iteration that we just passed, where we called this 29% move to the upside, did validate, and it actually was a correct iteration yet again, creating a total of 12 iterations, and now correct iterations would be 8. Okay, so, but in this case, it'll only change it by a little bit. The upside accuracy would possibly be around 64%, in the shallow areas of 64%, of course, and then this would probably be 29.05 or something like that. So they're still pertinent to the trade now. Okay, so yeah, we were looking at about 11 total iterations, of which 7 were correctly guessed to the upside. The average upside accuracy from that backtest gave us a 63.63% of guessing the asset's direction to the upside in particular. Okay, so now the average upside thrust was 28.998% over the span of just about 7.5 days. So we are in that process of resetting the conditions for a statistical upside. For a statistical upside yet again is what I'm trying to say. My apologies for that. Okay, so what we need is for both of the volatility. First of all, the volatility component is this spectrum line, the volatility component to BBWP. Okay, we need the moving average, which is this little pink line here. We need it also to be within the critical volatility zone, which is again within the 90 percentile. And aside from that, or alongside, we need the stochastic momentum averages both pivoted towards the upside. So as long as we can get that contraction phase started from volatility and the expansion phase started from momentum, we can then apply the averaged upside metrics that we have right over here, in particular to about a 29% move to the upside. So since the conditions or the criteria they're not met just yet, so we can only assume a continuation to the downside. But it looks, if you can actually take a look at these averages here from the momentum indicator, you can see that the averages are starting to get very close to each other. So as long as the K average, which is this blue line, starts moving to the upside, then the D average, the D percentage average, which is the yellow line, will start to be influenced by the movement of K. Okay, so in this case, we do need both of the averages pitched to the upside alongside, again, the volatility and movement, the volatility component and the moving average both pivoted towards the downside. Pardon me. Okay, so let's go ahead and move on to the next chart. So this is going to be the Crypstex indicators. These indicators are actually in partnership with me, and it's from Crypstex Trading themselves. They have since endorsed me or partnered with me, if you will, and they believe in my trading style and believe that I can bring some value into trading with such amazing tools, actually. So I have forward tested these, and I would not recommend them unless I had already seen them in action. And thus far, if you're a regular viewer, you know that I talk about these very often. We often look at these for long signals and short signals, or buy and sell, if you will. So thus far, we're getting some pretty good results and suggestions from the indicators themselves. So in this case, this is ARCa, and it is comprised of several exponential moving averages, all very close in proximity to each other, algorithmically placed within the chart so that we can gauge these directional waves. So these directional waves give us that motion and to understand the potentials of where a buy signal can be triggered or a sell signal can be triggered. So there's definitely lots of assistance within these indicators, and this is not the only one within the Crypstex set that give us long and short signals, or buy and sell. Okay, so in this case, the reason why I'm bringing this up is not to overshill the indicators, but it's actually for the fact that the short signal has been printed at the top of this candle on December 15th. Okay, so that was Thursday, December 15th. We did get a short signal on that, and this short signal has not been recovered thus far, so it is still suggesting a continuation to the downside. Okay, so now let's go ahead and get rid of ARMor and load ARC-DBSI, which is statistical. Hold on just a sec. Let me just get that out of the way. Okay, so yeah, ARMor is a statistical based indicator. Now, the statistics that it's actually gathering are based on the candle count. So it gives every single candle throughout the entire trading history of the FFIE asset, it gives it that count, or that average, is able to give us a percentage value of strength. Okay, so in this case, you can see that the bulls are at about 43%, while the bears are at 57% on the 4-hour chart. So the bears do have the ball in this particular time frame. Okay, so if we look at, for example, the buy hourly, we can see that the bears are at 54%, bulls are at 46. Let's go to the hourly chart. Bears are at 57, bulls are at 43, and we're still getting some potential continuation to the downside. On the hourly chart, the DBSI is giving us a buy signal with this little blue circle. The red circle usually means sell. So you can see that the sell signal came in here and it actually fell all the way to the ground. And we're now getting a buy signal. And it has since gone up just a little bit. But let's go ahead and combine the strength that we're getting from the ARC-Series indicators alongside other metrics, okay, so that we can validate or confirm upside or downside thesis. First of all, let's look at the divergence chart here. So divergence is usually the opposition of price action versus momentum, and in this case, momentum represented by RSI, so relative strength index. Okay, so for the new viewers, new listeners, the pink line that we're referring to here, it is a 14-day moving average, or a 14-period moving average. Okay, so the purple line, it represents the RSI signal itself. So on our last video from a few days ago, we actually did catch 2 drives of phantom hidden bearish divergence, and we actually did catch 2 drives of regular bearish divergence. Okay, I'm sorry, of hidden bearish divergence. So we did have 4 drives of bearish divergence here, of which actually did play out to the downside. Now we do have this small gap right down here located between the, let's see, wow, I can make that font bigger for you guys, my apologies. So for those of you who are looking on a mobile phone, can actually see the values a little clearer, right? So okay, so yeah, this is still the same gap that we were looking at from the broadening descending wedge, with a 33-cent top and a 30-cent bottom. Okay, so again, we're still very close to it, so there is a potential to where we can realize that downside. Sometimes when we do get a print like this candle here, it is a 12-hour candle, so we can give it some weight, but the other metrics are not suggesting an upside. Sometimes when we get an inverted hammer at the bottom of a trend or at the end of the trend, that usually signals a potential reversal. Okay, so in this case, the 12-hour RSI is still suggesting a continuation to the downside. Okay, so let's pull up the diagram for the RSI properties. Okay, so these are the properties that I would like for you to hone in on. The 4 zones located right over here, as I'm going to be using this language here. So I want you to kind of keep up with what I'm talking about. Okay, so please gander at this while I talk, and we will be just fine. So let's go ahead and open up a multi-pane so that we can get multiple time frame momentum suggestions up. So we're going to start with the immediate short term, 30-minute immediate short term time frame. Okay, so in this case, we are approaching the RSI signal is actually approaching the very shallow areas of the bear strength percentile. So, and you can see that we're actually using the moving average as a form of support before continuing on to the upside. So this is definitely in accordance with the hourly Crypstex indication or suggestion, sorry, right here. So it is suggesting a continuation to the upside, but it is in the hourly chart. So it is in confluence or in accordance with the 30-minute chart RSI. Okay, so the bi-hourly is pretty much suggesting a neutral direction. We are getting a hint from the moving average as a continuation to the downside. Another good thing is, a good thing is here is that we are definitely in the very shallow areas of the bear strength percentile. That usually means a gravitational pull into the opposing zone could be likely, okay? Now, this is what I mean by a suggestion or a continuation to the downside. Please take a look at the 6-hour RSI, as the RSI signal is suggesting a pretty aggressive downside continuation. Okay, so that downside continuation is now approaching the very deep areas of bear weakness percentile. You can see that the moving average is starting to make a little bit of a curvature and a pivot towards the downside. It hasn't quite completed it yet, but it's coming. Okay, so as the more we approach, or the deeper we get into this zone here, which is the bear weakness percentile, the likelihood of being gravitationally pulled into that following zone is greater. Okay, so we do have to watch our longs. Okay, so in this case now, the daily is definitely one that we have to give some credit to. The good thing is, while it is suggesting an aggressive downside, the good thing is that we do have the moving average below us, which can serve as a support, okay? But that's not a guarantee. And the reason why I can say it's not a guarantee is because of the bi-daily RSI. The bi-daily RSI is at the junction between the bear weakness and bear strength percentile, and it is suggesting a continuation to the downside. We do have the moving average below us, which we can use as a form of support before a continuation onto the upside. Now, the 3-day is also suggesting downside with a moving average below us. That also can be used as a form of support. And the 5-day appears to be finding that support very soon. Okay, so yeah, what this is telling me by putting together the entirety of the puzzle pieces is that we are likely to see a red session starting from potentially Monday midday. Or potentially Monday mid-session, we can start continuation to the downside to potentially fill this gap. Okay, the gap that we were talking about between 30 cents and 33 cents. Okay, so that could likely be an area for accumulation and or a demand zone before continuing on to the upside, thus penetrating the 4th test and true breakout attempt of the broadening descending wedge. Okay, so there could be a good play loading up right here. So statistically speaking, and also regarding the raw price action. Okay, so I think this is a pretty good place for me to leave off the video. Please know that I'm not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment. Please do your own DD and everything will be just fine. Okay, you guys? Don't hesitate to reach out to me. Okay, you guys, send me a DM. I'll make sure to leave the links in the description below for you to consider joining the ARCa trading community in Discord. Okay, so but with that said, I wish you well, a good night and a very good weekend, and I will catch you at the bell on Monday. Adios.